Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is April 2nd, 2018, and a couple interesting things are taking place here in lean hogs. So that's going to market that I'm going to really focus on tonight. ETF being HOGS. You can see that the short, intermediate, and long term all point to the downside as far as the trend goes, and there's no big surprise because there's been a major sell-off in hogs as of late. There was a bounce. We've come back down, and all of the trends are still pointing in the same direction. We have kind of a mixed bag here when it comes to the technical rating, but what's very interesting here is we have a number of lows that have triggered, both in the pro alerts as well as in our traditional overbought, oversold indicators. So in our elastic level, we have a slow low, which is better than just a slow or just a pivot low. This means that the market is kind of basing a little bit, so that's strong on the support level. We also have a sub low when it comes to our power level, and that particular case is looking again at a similar condition. Market is sold off and is looking for a bit of a base. If we take a look at our deep dive patterns, you can see that we just recently had a surge low, and if we scroll all the way across here, we had a keel low. It says KS, keel for low. Think of a sailboat. The keel is that fin at the very bottom of a sailboat. That's the keel low. The sail high is where we get the KS from. So we have a keel low that has occurred here, and that just triggered here today. This all makes sense when we actually look at the market itself. Let's first look at daily bars here for hogs. The market sold off. We had that major big day to the upside, and now we're coming back and essentially testing support. You can see that the energy level has been very, very strong. As the market has been selling off, the energy level has been rising, and that's now sort of peaking out, which gives us an indication that the market is kind of spent. We don't get a lot of these where we have, it's kind of hard to see here, but you see this dark blue dot. That represents, if I pull up our little thing here, it's a sub low on our power level. Last time we had one of these, we had a sub low that occurred here on this particular bar, and the market was able to rally. I'm not saying that the market's going to do that same rally, but there's enough indication here that even though there's support here, and I'll show you a little more detail here in a second, it's not strong support. But the key here is that we have two different variations, two different levels of indicators that are all pointing in the same direction. The pro alerts with the surge low and the keel low, that's telling us that the market is basing and looking to rise. And then again, just kind of reiterating here, we have a slow low, which is very strong for us on the elastic level, and a sub low or a slow sub on the power level. So they're all pointing in the same direction the market is basing. Let me take a look here at the market as a whole and try to give you an idea as to what's taking place here, if I can find it here. So these are daily bars here for hogs, and we have to go back some time. So I'm going to basically scrunch this up a little bit and try to see where the support is. And this is where I've been talking about. Here's the support levels to hogs, and they're not strong whatsoever. When we look at daily bars, 50 is high, 25 is high. That's really what we're looking at, 25 or higher. Then we take them seriously. But we're at a point right now, if we look at these lows, we've got a 5 and a 6. These two levels right through here, they are not strong. If this doesn't hold, then we're going to come down to this lower level where there's real honest to goodness support, and that lower level is at 68.233 in hogs. That's what this level is right through here. If you take a look at my arrow here and the crosshairs, you come all the way across here, you can see that we're at these two levels. They're just not strong. So we've got the pro alerts and we've got a lot of elastic levels. We got the power levels that are pointing to the fact that we should be basing here. That's the way that we should be looking at this particular market. But if for some reason we don't actually hold here, then our next level is this lower support level. And so we have a ways to go because this is pretty far away. If we take a look at these levels right through here, which is, with the market at 73.5, and we're looking at 68 and a quarter. That's a pretty far fall for the market to run to. Now, when it comes to our systems, the systems themselves are still short the market. We have a long position here. We just recently exited a long position. So we basically have one long, two short. So net, we're short the market. We've got a nice little profit going on here with the shorts, and we've been hedging ourselves a little bit here with the longs. And if the market is to really sell off here, break that support level that I'm referring to, hey, we're good. The systems are quite profitable. If the market is able to base here, we already have a little bit of a hedge here, and we would expect some of these shorts to liquidate themselves, and we might actually see some additional long positions start to enter. Actually, I forgot about this one up here. So we actually have 3 by 1, and so that being the case, we really do have an opportunity here for the market to really sell off here, which would be great for our systems, but we're at that critical support level, and I'm, for the most part, a little hesitant to say that the shorts are really going to kick into gear here, but we'll see what happens with the systems. If the market is able to actually reverse, then what we would see is from that side is maybe a few of the long, short, intermediate term intraday systems start to trigger, and we would liquidate some of our short intra-bar systems before we'd see some of the daily and the daily short systems trigger. But let's see what actually does take place here, and see as to whether the sport's really going to hold here. I'm just going to point this out that of all the markets we're looking at, you're going to see that hogs are the most energetic, meaning they have the most energy, the most velocity to themselves, and with that being the case, it's kind of quite strong. The second one is wheat, and Kansas City wheat, and normal wheat here, CBOT wheat. But hogs have just been so strong. I think what you're going to see is that it's going to start to taper off here a little bit, and we're going to start to see it come back to some form of normalcy. And that, if that does actually take place, then that support should actually hold. The short systems hopefully will liquidate themselves. We'll establish more long systems. We'll either hedge ourselves and actually take a long position. One of the two events will take place. But for right now, we're actually at, as I mentioned, that's that critical support level, and it's weak support at that. That's what you're really going to be looking for. So if we're not able to hold the lows that were set here back on March 28th, and that low being at 72.95, if we're not able to actually hold that, then we should actually see the market head to that lower level. There's no way to forecast because we're systematic. The systems react to what the markets do, and they're going to react very, very quickly. And so in that particular case, watch your trades. At another time, I'll start to do some presentations that will talk about different types of systems, different types of markets you want to incorporate into your portfolio. Hogs, I know it sounds strange for those that are outside of the realm of trading hogs, but hogs are it's a really good market to trade. They have the ability to react to the market. They're consistent with what they do. They react correctly. There's no ambiguity for the most part to this particular market, and they also find themselves in a position where we also are able to factor them into normal portfolios because of their non-correlation. So it's a really good market. And when we start doing some of the presentations about the markets and their characteristics, then you really appreciate different types of markets, hogs being one of the better markets to trade. Not the most liquid, You're not going to be able to trade a lot of contracts, but for an individual that is looking for some non-correlation to be incorporated into their portfolio, it's an excellent market to trade, and we'll attack that and we'll look at that market in a little more detail in time. But for right now, watch the systems, watch this. I wouldn't call it fake support, but this weak support, and for those that are trading on the short side, we're looking to break it. If for some reason it doesn't, it does in fact hold, then some of those pro alerts that have actually triggered as of late, then we would expect the market to potentially rise here. We're going to see how things kind of play out here, and we'll see how we want to actually trade this with the systems. Any questions? We'll go from there. Thanks very much for watching.